Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Tuesday morning, I'm Prashant. With me, my colleagues Nigel and Survi. Guys, good morning.
Hi, morning.
Hi, morning, folks. A bit of a same old story playing out, right? We get to all-time highs, then the momentum fizzles. And this morning, we're waking up to slightly red-looking global screens. Red, the color of the season, Nigel.
Well, that's right. Color of the season, but not the color that the bulls would like to see, right? But let's see how it goes. However, as you said, at higher levels, we are facing some bit of resistance, which is making you a little bit nervous. More action, I think, in the money market, the Indian rupee. I think that's going to be the key tracking point for today. But Prashant, let's kickstart with the action.
No, absolutely. And I think, U.S. markets, first fall in, I think, 6 odd days, 6 trading sessions now, the market's basically gone up. And finally today, we had a bit of a sell-off, which we saw. So S&P down about 0.5, NASDAQ down about 0.3 odd percent or so. If you look for reasons why the market was down the way it was, I mean, you wouldn't find too much, except the fact that there was a steep decline as far as Bitcoin is concerned. Now, Bitcoin fell 7%. I think it broke $85,000 on the downside. And it's the largest daily fall since March. I've always said this, Bitcoin, use it as a risk tool or sentiment indicator. So you can trade. The highest correlation of Bitcoin is to non-profitable technology companies in the US, not the Magnificent Seven, but the non-profitable tech. So it's a very speculative asset class, and when it goes down, it kind of tells you that risk sentiment is shrinking a little bit. It's not expanding. When it's expanding, you're trying to do more and more things, and you're sort of going into more and more speculative areas of the market. So keep an eye out on this one. Now, the 10-year yield in the US was up 8 basis points. We're past 4%. Again, no real big specific driver, except the fact that maybe, Black Friday sales were strong, and perhaps at the margin, they were seen as a bit of a contributor. Technology and AI deals continue. NVIDIA has bought a $2 billion stake in chip design software maker Synopsys. That's the latest. Stock was up about 1.5% last night. So that's essentially the summation of US. Later today, there's not too much data, economic or otherwise, so it's going to be quieter on that front. The Russia-Ukraine thing, right, that's the other big global story which is going on. And I saw this Bloomberg headline which said that Ukrainian President Zelensky has praised a new iteration of a peace plan, of a US-brokered peace plan. So he's, of course, been sounding more and more constructive that perhaps something will get done. But you have EU, which is split right in between. I mean, if this deal goes through with Russia retaining whatever land it's already taken of Ukraine, I mean, basically it's going to split Europe right down the middle. Those who, of course, oppose Russia, those who say, well, let's move on. And those who move on include powerful countries and, of course, the biggest country, which is Germany. EU's top diplomat essentially expressed reservations about a US-brokered peace deal. And she said, well, if this goes through, it's going to essentially raise the ambitions of quote-unquote warmongering by Russia. So that's the global front, but I think this is important to keep in mind, especially from an oil price perspective. Rupee has fallen, and I think one of the reasons why the market made an all-time high above 26,300 yesterday and then sold off promptly was, of course, the fact that the currency turned sour very quickly. So we hit 89.80 and we finally closed at 89.54 up on your screen. So there was a big recovery, which of course happened from the lows. But at 89.80, you were pretty close to that 90 levels, which some believe, of course, are now pretty inevitable. You're going to basically trade above it sooner rather than later. Now, the levels, Nifty, of course, the high yesterday is 26,326. Both Nifty Bank in uncharted territory. So you basically just, in a way, trail those highs in reverse, not use them as stops, but basically become the target. Support is the 20-day, which is 25,910. For the Nifty Bank, we set a record at 60,114. It was a big red candle. After that, support stands at the 20-day, which is 58,700. It was very, very quiet yesterday, with, of course, some shooting stars here and there. But a mix of a combination of, a currency which was weak and general lack of enthusiasm because broader markets have not done well, and I think kept the indices well contained as well. What's the F&O stats after yesterday looking like? What's the positioning looking like? Nigel has walked across to the wall. Nigel, over to you.
Well, the Nifty seems to be in a bit of a range. But I'll tell you what, a big amount of attention today will be on the money markets because the Indian rupee, the way it's been slipping, that's making traders a little bit nervous. And besides that, today we have the Nifty weekly expired that will play out as well. So it adds a little bit of spice to the trading session, particularly at the final 60 minutes. What happened yesterday in terms of flows? The FIs were sellers, not very, very large, but 1,200 crores or thereabouts. The DIs, they were net buyers. So net, you had an institutional buy number. The FIs on index futures, not too much movement, mild movement on the longs as well as the short side. They continue to remain net short with close to around 81% of the positioning on the short side. Yesterday, you saw calls were getting written again very, very aggressively. So the number of calls that were written in comparison to the number of puts was close to around 5 calls for every 1 puts. That's from the FIs on the index options. And that perfectly ties in with the options data that we saw, right? The PCR, remember a few trading sessions ago, had got dancing away to around a 1.5. Now it's cooled off to around 0.88. Remember, at around 0.65 to 0.7 is when we see the PCR forming some sort of a basing out. So currently at around 0.88, it's still got some distance to go. And the reason that the PCR has come down is because the call writers have been aggressive. 26,200 call, 26,300 call. Out there, close to around 1.8 crore shares have got written out there. And on the downside, the bulls are not throwing in the towel as yet. 26,150. That's the important mark, in terms of put writing. Now, you punch in these levels and you'll see then the last few trading sessions, 26,300, 26,350, that seems to be a bit of a resistance mark. So the bulls will have to fight their way past this mark because that level has got rejected. On the downside, though, the 26,000 mark is very important, going by the kind of options data that we have. And deeper down there, 100 points deeper, is around the 25,900, which is the 20 DMA. So that's the important range you'll want to defend. The Nifty Bank has been leading the way, and you have, the 20 DMA, that's deep. That's close to around 700-800 points away from current levels. In terms of stocks that I'm looking at, well, the dollar index has shown some weakness, and we know that we've had a bit of a melt up on, metals. Particularly, aluminium has been showing some strength. Silver has been doing very, very well, and that's why I'll keep an eye out on Vedanta because it has a stake in Hindustan Zinc. So both these two stocks will be on your radar. Aluminium play could be Vedanta, and in terms of silver move, Hindustan Zinc is a stock that should be kept on your radar.
Okay, all right. So indeed, those metal stocks have been hitting all the headlines, and we'll keep them on the radar today as well. Asian markets, by the way, are in sync with the weak handover that we got from Wall Street. So there's a fair amount of red on the screen, a lot of caution out there. And the Bitcoin continues to be a big talking point with crypto selling off yesterday. So let's watch for this. Mainland Chinese markets, the data has been very weak. Even the PMI numbers that came out yesterday, there's some buying that is evident right now, but a lot of the larger markets are still weak. Let's look at the implied open to get a sense of where things could start for us, what the GIFT Nifty is indicating. So not too much on the downside, 14 points lower. So let's see if the bulls manage to prevail at lower levels once again. Let's move on then to the equity call of the morning, and it's coming in from Sayan Mukherjee of Nomura, who says that they are likely to end 2025 on a much sanguine note. He says the economic and technological landscape remains unsettled amidst unprecedented moves by governments, policymakers, central banks and tech companies. The new macro equilibrium and the path to it are still uncertain. For India equities, he also says that a calmer world, cyclical economic and earnings growth recovery, favorable policy moves to support growth and structural issues, and a moderation in relative valuations give them comfort. They have set a Nifty target of 29,300 for the end of 2026. Okay, so that's a Nomura view coming in, 29,300 by the end of next calendar year. Well, let's get to our first guest on the show, then Lynn Alden, founder of Lynn Alden Investment Strategies, with us. Lynn, great to have you in. And the starting point remains the same, right? What's happening with the tech trade in the US? Because every now and then we get some shakeouts in the market and the so-called circular deals. There's no end to them as well. We just had another one announced yesterday. What's your sense? Are you still buying US tech stocks?
Thanks for having me. I think we're finally getting to the point where the AI trade and the overall U.S. tech trade is getting long in the tooth. I think that the market is starting to price in some realistic concerns with them, mainly the serious capex that they're going to have to do and kind of the valuation adjustment around that. There's also, of course, been some disruption. The market's realizing that NVIDIA might not be the only game in town. Google's chips are showing promise, of course, with some ability to sell outside of their own company. My view for a while is that Alphabet, Google, has been kind of the laggard to buy, but I view that trade as largely done now after their recent run, and so I'm actually pretty concerned around tech stocks. Not that I expect some major crash or anything like that, but I think that they are set to probably have a weaker 2026 than they have here in 2025.
Does that mean anything significant with respect to change in asset allocation? I mean, where does the money move then? Do you see it coming to, some of the underperforming markets like India?
I think it's possible. I think that, so my view for most of this year was that I liked some of the other emerging markets, like Latin America, for example. India has been a laggard this year. I am somewhat more optimistic about India next year going forward. Of course, I still think the structural headwinds are there. It's just mostly been a valuation concern. And of course, the markets that benefit from a weaker dollar have done pretty well this year, whereas India is less associated with the dollar as directly. So I think 2026 is probably going to be a better year for the Indian stock market. More broadly, I think that there is still value in some parts of the U.S. market outside of tech. I'm less bearish on financials in the U.S. than many others are, for example, despite slowing economic concerns. So there are pockets of interest. But the sheer market cap of the U.S. tech play is likely to weigh down the indices next year.
Okay, all right. Hi, Lynn. Good morning. Good to see you, Ben. We're seeing some weakness on the yen, out there. And I was looking overnight, the probability of the Bank of Japan going ahead and hiking rates, that's gone up, actually. Do you think that could spook global equities because of the yen carry trade? And what are you factoring in terms of central bank action, both from the Fed as well as the Bank of Japan?
Yeah, so lately we've actually had unusual volatility around both the Fed and the Bank of Japan. So the probability of a Fed cut or pausing has been whipsawed in recent weeks. And then we've seen recently the same thing out of the Bank of Japan, which is that markets were kind of caught unaware at how hawkish the BOJ might be. We've, of course, seen sharply rising yields in Japan on the longer end of the bond curve. And as you pointed out, a weaker yen. I do think that the Bank of Japan is going to get slightly more hawkish here. The issue, of course, is that they're in fiscal dominance, meaning that they have very high public debt to GDP. They have pretty sizable structural deficits. And so interest rate hikes don't necessarily contain the yen fall as much as it would otherwise, because it actually contributes to blowing out the deficit. One of the big things that is kind of always in their back pocket is that they can sell U.S. Treasuries. They've got substantial reserves. So we could see more rounds of that in the future whenever it gets any sort of disorderly. But I do think actually right now some of the biggest issues that's hitting broad markets, probably especially the Bitcoin and crypto markets, because they're kind of more liquidity sensitive, this kind of thing, is some of the issues for both the Fed and the Bank of Japan. Here, of course, in the U.S., we've had some repo activity issues. So we've had kind of a spike in secured financing rates. We've seen some usage of the Fed's standing repo facility. They've, of course, ended quantitative tightening, but they probably still have more liquidity provision to do to fully put out those fires. So I think the combination of that kind of tight U.S. domestic liquidity, as well as some of the hawkishness, the falling yen, the rising yields in Japan, are probably both contributing to some of the weakness we've seen in certain parts of the global market.
Okay. All right, Lynn, we'll leave it there for this morning. Thank you so much for joining in. Good to get that perspective from you today. Thank you very much.
Thank you.
By the way, guys, one more thing that's kind of, it's like rubbing salt on wounds. It's trade and tariffs, because there are statements for South Korea in favor of South Korea this morning that the auto tariffs there are going to be 15%. Rest of the tariffs will be rolled back to 15%. So Japan, it's quite startling that Japan and South Korea, which comprise a large part of U.S. Imports coming in, basically the big exporters to the U.S., they get 15% tariff, and we're still at 50%, 50.
I'll just say one thing though,
Yeah.
Filiz, right? Both for Japan and South Korea. Think about it from Japan and South Korea's angle. What's our exposure to the US? It's very small. I think
It's 2% of our GDP,
right?
US exports.
Now look at that number for Japan and South Korea.
It's huge.
It's huge.
Yep.
So
they've had to give in.
The imperative for those countries to do a deal is also that much larger. It's not that it's not important for us, especially I think if you talk to economists, many are pointing out that the stress is not for large corporates who've all delevered, access to funding, etc. It's across SMEs, etc.
Yeah.
But I think when you look at countries, I think this is one of the factors is that they're much more exposed to the US in every way.
Yeah, no, I'm just going back to April 2. The whole premise was, large trade deficits these countries are running with the US, so we must tariff them.
Yeah.
Biggest deficits are coming in from Japan, South Korea, and they're at 15%.
I'll put it in a lighter vein, right? You're going for the Christmas dance and you expect it to be picked first. And now we're still stag and, couples are already made. But hopefully we get the best date for the dance.
Still time. All right, let's go on and tell you what else we've got lined up for you on the show. Plenty coming through. So at 8:35, we'll have the recently listed MV Photovoltaic to talk about how the business is shaping up, what their outlook is for the rest of the year. We'll learn a little more about that company with the Suhas Donti. At 9 a.m., we'll have with us Elara Capital's Karan Taurani. They've come out with a very exhaustive, detailed report on platform companies, parallels, from around the world, really, how companies have shaped up in larger markets like Japan and China, and what the runway here in India is looking like. At 9:20 a.m., we'll have Edelweiss AMC Srudeep Bhattacharya joining in. He's a market master of the day. At 9:35, the management of Shree Cements will be with us to talk about the demand trends, pricing trends, as well as overall outlook on the business. Mr. Bangur will be with us at 9:35. After that, we bring you the conversation with the management of Wockhardt at 9:50 a.m. as the US FDA has accepted the NDA for Zynic, which is a critical drug for Wockhardt. Towards the end of the show, Lata will be speaking with Suyash Chaudhary of Bandhan AMC and Dheeraj Nim of ANZ Bank on the outlook for bonds and the rupee ahead of the RBI policy.
Well, time to slip in a short break. We go full tilt in terms of stock-specific action in our top 10 segment. For the time being, I give you a sneak peek. Hero MotoCorp, NMDC. You have Ambuja Cements, Moil, Bharat Dynamics, Afcons Infra, IRB Infra, and Vodafone Idea. All of them will be reacting to positive news flow. While you have some supplier paper that's going to resume, so Bajaj Housing Finance and Bank of Maharashtra will be in focus on the red side. Take that break, come back into further detail on all of these names.
Welcome back. Mixed trends across Asia. Some of the markets like Hong Kong and South Korea are doing fairly okay, thanks to, South Korea largely thanks to that tariff reprieve. Basically, they're moving to 15% as was discussed with the US earlier. It's just getting operationalized and it's with retrospective effect from the 1st of November. So good going for those markets. Where does it leave us? Last time we checked the implied open, the GIFT Nifty was suggesting that we'll probably start around 14, 15 points lower. Let's see where it is right now. Yeah, 9 points lower. So we'll have to see if the bulls can again come in at lower levels, buy with more conviction this time around. Let's talk about stocks as well. Plenty to track at an individual stock level basis. So we have a team standing by with the CNBC-TV18 list of top stocks to watch. Morning, guys. So let me start with you. Lots of auto numbers have been pouring in, auto sales numbers, that is. How did Hero Motor fare?
The last company to report auto sales for the month of November was Hero MotoCorp. So before I talk about the numbers, take a look at the stock performance. It's up 51% 2025, and majority of those gains came after August 15, the day PM Modi had talked about GST cut. Now talk about our number sales. It was a healthy set of numbers that company has reported. Total sales have increased by almost 32% versus our expectation of an increase of 29%. And both domestic as well as exports have seen a healthy growth, at that growth rate was in the range of 30 to 70%. Talk about the segments. Motorcycle has seen a growth of 27%, scooter has seen a growth of 93%, and Vida, that is the electric two-wheeler, for which registration was up more than 60%, and even company has seen an increase in the market share. In November, market share was 10.4%. Now it has even Hero Moto has crossed Ola Electric's market share. Now on the commentary, company is saying that the majority of the growth was led by new launches that company has made in the last few months. But YTD motorcycle sales, even for Hero MotoCorp, are down. It's down almost 2 to 3%, almost in the similar line that we have seen for Bajaj Auto. But on the basis of number says, I'm going with green.
Okay, all right, sir. Thanks a lot for that. Well, Vivek is tracking two stocks, Bajaj Housing and Bank of Maharashtra. Morning, Vivek.
Well, good morning. That's right. So, both of these stocks are, in focus on the back of the fact that they're expecting large equity offerings in both of them. First, let's have a look at Bajaj Housing Finance. Close to 1,500 crore worth of equity is expected to change hands. The promoter, Bajaj Finance, is the likely seller in this particular block deal, whose term sheet we managed to access last evening. Now, the interesting part is, the floor price for this particular block is at 95 rupees. Almost a 10% discount to yesterday's close. Total size of the offer is 2% of the total equity, and there is a 60-day lockup on further sale of shares. The second stock on our radar is Bank of Maharashtra. Yesterday, our colleague Ruchi did report that there could be a likely stake sale in the offering as far as Bank of Maharashtra is concerned. Along those lines, last evening, Government of India, who is the promoter in this particular company, actually launched an OFS to pair their stake to meet the minimum public shareholding norms. Now, when you're talking about the OFS, it opens for non-retail investors, that is today, and for retail investors will be tomorrow. The floor price for this particular mop-up of close to 6% of the total equity is at a discount of 6% to yesterday's closing. The base offer size is 5%, the green shoe option is 1%, and the total offer size that the government would be able to mop up is slightly over 2,450 crore. Going with red on both of these names.
All right, and interesting one, Bajaj Housing. Recall, IPO comes in at around 70 rupees in September 2024. The stock goes dancing away to 170. And now you have an OFS at around 95 rupees or thereabouts. A wider term chart actually will tell you about the way the stock has come down from around 165, 170 odd to around this 100 rupees odd mark. That said, Vodafone Idea is on Rima's radar. Rima, morning.
Hi, so there are two key takeaways from Parikshit's interview with Jyotiraditya Scindia, the Union Telecom Minister, and this was the CNBC-TV18 exclusive. One is the timeline for the AGR relief. The government hopes to announce the contours of the relief package for Vodafone Idea by year end. What he went on to say is that the DoT is waiting for a formal request from Vodafone Idea. The government will make a recommendation after evaluating Vodafone Idea's proposal. The Supreme Court judgment is recent. We will share the contours of the package once the government is ready. But the government may be able to complete its assessment and come out with a recommendation in a couple of weeks. And he's hoping for year end. So the timeline is very, is the new takeaway that we have gathered from the, interview. And secondly is clarity. The Supreme Court judgment is for Vodafone Idea alone and not for the other telecom companies. He says the Supreme Court judgment is for Vodafone Idea and therefore any government recommendation is for this company. We cannot cross the border of the Supreme Court judgment. Any other company which wants similar relief on AGR will have to approach the Supreme Court. Bharti Airtel as of now has not made any request for relief from AGR dues. If Bharti Airtel were to pursue a similar AGR relief, it would be up to the court to decide. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, I'm looking at a few stocks from the mining and material space, namely cement. Let's start off with NMDC. The November update did come in. The total iron ore production is up by close to around 11%, came in at ballpark around 5 million tons odd. The sales number, though, that's lagging a little bit. That's up only around 4% on a year-on-year basis, but going with green because, sentiment is such that metals could relatively outperform, and also with the rupee depreciating. It's actually good news for some of these stocks because importing becomes a little bit more expensive. So that's why going with a tinge of green on NMDC. Moving to Ambuja Cements, they have gone ahead more or less, par for the course or normal course of business. They have commissioned the 4 million ton brownfield expansion of the clinker unit. That's in Chhattisgarh. The total consolidated clinker capacity now has moved to around 66 million tons. And the company has already told us that the clinker capacity by the end of FY27 goes to around 81 million tons and by 28 goes to around 96 million tons. So it gives them ammunition to go ahead and produce high amount of cement. Going with green on that as well. And MOIL, the price increase that they have taken from December 1st, 2025 on ferromanganese ore, prices are up by marginally, 3% or thereabouts for both grades and above and below 44 manganese. So on the back of that, a stock that's corrected big time from the top, maybe a tinge of green on all these three names. But let's wind this down. Upasana joins in to tell us about some stocks that are on the news. Hey Upasana, take it away.
Good morning. First up, let me start with Bharat Dynamics. The company has secured additional orders from Indian Army worth 2,462 crores since 13 November 2025. These orders are mainly for anti-tank guided missile and even surface-to-air missile. Now, mind you, on 13th of November, company had also received orders worth 2,095 crore from Ministry of Defence. With this, the company's total orders received in the month of November touches 4,558 crores. So we'll be surely looking out for that one as well. Next up is Afcons Infra. The company has received EPC orders worth 884 crores in the month of November, and these are the orders mainly for civil infrastructure works under its marine and industrial business unit. And lastly, coming to IRB Infra, the board has approved sale of entire stake held by the company in its wholly owned subsidiary, that is VM7 Express Private Limited, to IRB Invent Fund for 513 crore. And company has also agreed to act as a project manager for a period of 15 years for 246 crores. So we'll be watching out for all these stocks in today's trading session.
Okay, so plenty of order wins. Perhaps they could fire up some of these stocks. We'll quickly recap our list of top names to watch this morning. Thank you for that, by the way, Upasa. So here's a list. The stocks that have positive news flow around them are Hero MotoCorp, NMDC, Ambuja Cements, Moil, Bharat Dynamics, Afcons Infra, IRB Infra, and Vodafone Idea. Stocks with negative news flow around them would be Bajaj Housing Finance and Bank of Maharashtra. Okay, with that, let's move on. That's the equity picture for the morning. Let's figure out what's happening in commodities. Manisha is joining in with a roundup. Manisha, the crypto market's making a big headline, right? A big sell-off overnight. But what else are you looking at?
Oh, yeah. The crypto markets have actually seen $400 million exchange liquidation in the overnight markets in the last 24 hours. So clearly, a lot of decline coming in. Anywhere between 5 to 15% of a cut is what we are looking at when it comes to crypto. But take a look at the gold and silver prices. And yesterday was a very strong day. We saw all-time highs in silver. But since then, there has been a bit of a profit-taking coming in here. Well, the fundamentals still stay strong, but the markets did see a bit of a heating up. And that is what is letting off slight steam right now. But with the U.S. interest rate cut in December now at an 87 to 88% of a probability, you could be looking at support continuing in much of these commodities, especially with the fact that the dollar index also has slipped to a two-week close. The only thing that I see really trading firm is the copper prices, very close to its all-time highs that it hit in the previous week. And the other one is the crude oil prices. The Ukraine attack over the weekend, which has led to Russia's Black Sea coast port authorities holding all loading operations, one. And second is the rising tension between U.S. and Venezuela seem to be keeping crude oil prices quite in a positive territory.
Okay, all right, Manisha, thank you very much. So let's see how this impacts even the equity market with those cues coming in from the commodities side. Thanks for joining in. We'll take a break, come back on the other side. We'll have Parag Thakkar, Senior Fund Manager at Fort Capital, joining in. We'll discuss some fundamental ideas.
Welcome back. You're tuned in to Bazaar Morning Call and hope you're having a good morning. Well, let's focus first on a CNBC-TV18 exclusive. Telecom Minister Jyotiraditya Scindia has said that the government is waiting for a formal request from Vodafone Idea seeking AGR relief. When asked about Bharti Airtel, Scindia clarified that any other company seeking AGR relief must approach the top court. Let's listen in to his comments.
Ask you about the big development that has come from the Supreme Court, with the court saying that the government can go ahead and reassess all of the AGR dues of Vodafone Idea. Having said that, what next is the government planning to do? What are the options?
So, post that judgment, which is what is being examined within the department today, we are also awaiting the formal request from Vodafone. Once that does come through and we complete our evaluation internally, we will then put forward our recommendation of what can be done and what cannot be done.
Bharti Airtel has also requested the government for reassessment of all AGR dues. Are you considering the same?
Well, no official request has come to me as of now. In the event that they would pursue that, again, that is something that the court of the land will have to decide.
when it comes to waiving off or reducing the AGR dues for Vodafone Idea, would this be specific to one company, or whatever kind of resolution that you come forward with, relief package that you come up with, it will be for everyone?
The Supreme Court judgment is qua Vodafone India. So whatever we come up with has to be qua Vodafone India. We cannot cross the border of the Supreme Court judgment.
So you feel that the question of parity for the whole industry doesn't arise here?
As I mentioned, the Supreme Court has made a verdict on Vodafone India, and that's what is on our table today.
So very simply put, any company which wants similar relief, they will have to approach the Supreme Court.
Absolutely.
All right, let's welcome Parag Thakkar, Senior Fund Manager at Fort Capital, who joins us on the show. Hi Parag, good morning. Good to see you win. Well, Vodafone Idea went to around that 11 rupees odd, but from there, we did see some kind of rejection of that level. And because they raised money at around 11 rupees, that could be a bit of a resistance. Now, there are some on the street who believe there is still hope out there. It's going to be a three-player market. They take a bit of a punt and go ahead and buy Vodafone Idea. While others say, why do hassle yourself? You have better players. You have a core player, which is Bharti Airtel. And you probably have an IPO coming out of the Reliance stable as well. So you rather play those two names. How are you positioned on telecom? What do you like?
So first of all, let me tell you, Reliance is my top holding for sure. So that is one. Second, I expect government, because now government owns around 49% stake in Vodafone. The intent will be definitely to save Vodafone. That is my understanding. And I am playing Vodafone through Indus Tower in my portfolio. So Indus Tower is also one of my large holdings, and I am betting on that the intent will be to save Vodafone, and hence Indus Tower will be benefited. And we have all seen that Bharti has increased stake in Indus Towers at regular intervals. They have clearly said, Mr. Gopal Vittal has on record said that Indus Tower offers a deep value compared to the global peers like American Towers and all. If you see it on EV/EBITDA or market cap by cash profit basis, Indus Tower clearly offers great value. So I would say that I would play it through that. And just to be on Vodafone Idea, because of the net debt to EBITDA number, we cannot buy it in the fund. But I would like to say that definitely the intent is there to save it.
Yeah, no, absolutely. Intent is there. We'll have to see what form it takes, right? That intent takes to be able to actually do it. Now, Parag, good morning. Let's talk about what you like the most, which seems to be PSU banks and SBI within that pack, right?
Absolutely.
So tell us, what's new information which is adding to the confidence here?
See, I'll tell you the new. See, everybody knows that SBI trades at 1.1 times price to book, and PE. If you knock off the subsidiary value of 300 rupees, and remember in this 300 rupees also, SBI Life and SBI Cards are listed. But I think many people don't know that SBI owns stake in NSE also, which is worth 50,000 crores. And SBI Mutual Fund is going to get listed. SBI General Insurance is going to get listed. So that is monetizable thing immediately, I would say. So basically 300 rupees out of this 973 subsidiary value. FY27 book value is 585. So it is just trading at one time price to book, while ROA has now crossed 1%. This quarter, they showed NIM expansion led by 18% growth in current account and 25% growth in fees, YOY. This is a bank with 44 lakh crore loan book with a credit cost of below 50 bits, which is amazing. They have revised their credit growth guidance from 11 to 12% to 12 to 14% because of the government and RBI actions, which are completely pro-growth. So I would like to say that it is a pure play, leverage play on India's economy, which is going to do well. And I would say that with a credit cost of below 50 bips, where can you get this kind of bank when India's GDP is growing at, say, average around 7.5% also, if you knock off the deflator impact of that 8.2% GDP growth. And with huge amount of subsidiary value, great franchise, and absolutely savvy and very intelligent chairman, who also said that, even if there is a 25 bips rate cut, their guidance of 3% NIM at the exit of March 26 does not change. Because they have been managing it brilliantly through current account accretion, which is a low-cost deposit, and fee income growth.
Okay, Parag, stay on, and maybe you listen into this conversation if you can, because we do want to talk about renewable energy companies and from a stock perspective, what to look at. And in fact, we're speaking to one such company right now. Solar PV module and solar cell manufacturer, MV Photovoltaic Power, is the first management on the show today. The company recently made its market debut. It was a bit of a flat, quiet debut. However, the second quarter numbers look very, very strong for the company. To discuss this and more, we have with us Suhas Donti, CEO at MV Photovoltaic Power, joining in. And we want to cover, Suhas, hi, morning, great to have you. And we want to cover 3 key points. I'm just laying them out for our viewers. Of course, we want to understand your guidance. Your Q2 has been very, very strong. So what are the rest of the quarters looking like? Of course, get an idea on the order book and the ordering trends. And of course, we want to understand more about the capex and the peak revenue potential. And let me tell our viewers as well, let's pull up the numbers just to put things in context. Now, year on year for this company, the growth in Q2 has looked very strong because of a low base and they've added capacity. So obviously those numbers, look at that, from a revenue of 400 crores, it's jumped up to over 1100 crores. Likewise for EBITDA margins, 23%, 35%. So this is a year on year effect, low base. The question is now what happens from here? Suhas, can you just tell us whether these EBITDA margins now at 35%, are they sustainable? Have you added all the capacity or is it still work in progress? You said at peak capacity, when all of it comes on stream, the revenue potential in a year is 5,000 crores. When do you get to it?
Thank you, Survi. Thank you for having me on the show again. So basically, this is our first quarterly result after listing, and we're very excited to present that here today. And as you have seen, that our results are on your screen right now, and the revenues, as they have increased quarterly, but your half-yearly revenues is at 2,158 crores, and our EBITDA and PAT have surpassed what we have done for the last full year of last year, financial year. So, and more importantly, our EBITDA margins, the growth that has come from 23% last Q2 of
Yes, Suhas, we're aware of Suhas, we're aware of the current numbers. I just went through them in a lot of detail. What the market is keen to know is what happens in the second half. Can you sustain at 35% EBITDA margin? And how does the revenue scale up with your new capacity?
I'll focus on that. So, you can see that the increase of EBITDA margins as well as the PAT numbers are coming with the addition of cell manufacturing expansion that MV has done to become an integrated solar manufacturer with the TOPCon capacity, right? And that is something that we have seen not only in Q2, but Q1 numbers also were strong at a 34% EBITDA. And we have seen that the performance in the last 2 quarters of the...
Suhas, Suhas, we're short on time. Morning. Can you tell us what will be the growth in revenues and profits for this year and FY27 after that?
Sure. So basically, our expansion plans, as Ruby was asking, is on track, where we have 7.8 gigawatt of capacity today. So we're adding another 2.5 gigawatt of capacity that is going to get commissioned in this month. And further on, we are going to be adding 6 gigawatt of cell and module integrated that's going to come in only by the next 18 months. So with that, it is, you can imagine the growth potential.
So what is it? So it'll all show up in FY27. As you exit FY27, I'm assuming. What will that number be?
I don't think I can give you exact numbers, right? Considering.
Okay. What is the capacity by that time? After all that you mentioned, 2.5 now, 6 more. So by end of FY27, what will be capacity?
By FY27, from 7.8 gigawatt of module, what we are at today, it will be 16.3 gigawatt of module. And our cell capacity will remain from 2.94 to 2.94 by FY27. And by beginning of FY28, we will be adding another 6 gigawatt of cell manufacturing capacity. That will take us to 8.9 gigawatt of cell capacity.
All right. Hi, Suhas. Good morning. Good to see you. And Suhas, we know you have selected the team. We know who's on the bench. So we have all of that with us. Now we want to know what is the delivery, right? Now, you have done around 1,000 crores in the first quarter. Second quarter, you did around 1,100 crores. Give us a few details. The second half of the year is better than the first half of the year normally?
Yes, that's what Trishti has spoken.
Right. So then approximately going by the current run rate, maybe you can do ballpark closure around 4,000, 4,500 crores for this fiscal year. Is that a gettable number?
I think the current run rate is something we're very confident to achieve.
Correct. So that would be ballpark around 4,400 crores or thereabouts, going that you did around 1,100 crores in the past quarter. That should be a fair estimate, right?
Should be.
All right. And margins, you're holding around this 35% odd. I think when you listed, you had told us that you'll be happy in this vicinity of around 33 to around 35%. So you'll continue to hold on to that guidance, right?
Absolutely.
And the final question with regard to the debt, you raised some money. I recall when you listed, we didn't get a clear answer with regard to the debt picture. And obviously, you have very, very ambitious plans on adding capacity. So what was the debt? Post-listing, what is the debt? And given the capex plans, where is the debt headed? That'll close the loop.
Sure. So our debt is at 1,863 crores as of September, and we've repaid 1,621 crores. So our debt is now less than 100 crores of long-term debt that we have.
Okay, and the capex, how is it getting funded? Because it's a long capex program. What's the cash on the books, and how will you fund the capex?
So if you see that our operating cash flows have been quite positive, especially with our EBITDA and PAT numbers that are seen on results, and our capex plan is 5,500 crores for our expansion until 2028, and this is going to be funded in phased manner, and we've already have internal accruals for the equity portion, and there is 60% debt that is going to be that is already secured from IRIDA for this.
Okay, all right. So as we leave it there, thank you very much. Good luck. Appreciate it very much here on CNBC TV18. Well, technicals in focus and our guests on the other side. Okay, well, welcome back. There's, 11 minutes to go for the pre-open session. 21 points lower in the implied open. Hormuz is here with the heavy movers yesterday. And what did it look like? Hormuz, take it away.
Good morning, Prashant. And some interesting names that have sprung up today. And pipe stocks have been, in some day or the other, trying to make some outsized moves in trade. And Hariom Pipes was the one yesterday. This is the biggest single day gain since listing for the stock. The stock was up almost 13-14% in yesterday's session. This was the first time in the last 5 months that more than 1 crore shares were traded in a single trading session for Hariom Pipes. And Monday's volumes were the sum total of the last 58 sessions put together. You look at the volumes, almost 1.5 crore shares that were traded, 20-day average of just 1.5 lakh. And out of those 1.5 crore shares, only 9 lakh shares were marked for delivery. The 20-day average here too is just 74,000 shares. But despite this outsized move yesterday, the stock is still down 35% from its 52-week high. IEX made a move on the upside yesterday after ending at the day's low last Friday. And the volumes and the delivery activity both have seen an increased pickup in the last 4 trading sessions. This is the third time in the last 8 sessions that more than 1 crore shares have been traded. Yesterday, we saw 3.2 crore shares traded on IEX, the 20-day average of 60 lakhs, so it's almost 5x, and 92.5 lakh shares marked for delivery, the 20-day average of around 25 lakh shares. So year 2, this is 4x of its 20-day average, and the stock down around 19% year to date and still around 30% lower from its 52-week high. And lastly, ZF Commercial Vehicles is a 4th straight day of gains for the stock. Volumes were the highest since November of last year, and almost 2.5 lakh shares were traded. The 20-day average here is only 23,500 shares, and only 44,000 shares out of those were marked for delivery. Here too, the 20-day average is only around 20,000 shares. The stock has done well so far this year, but was down around 25% last year. So the last 2-year returns almost comes down to zero.
Okay, all right. Thanks a lot for that, Hormuz. Well, let's focus on Vocard. It zoomed in trade yesterday. There was some good news that did come in. Ekta joins us to help us out with details on what caused the stock to spurt up close to 20%. Ekta.
Well, yes, Wockhardt was in focus in yesterday's trading session on the back of the news that the US FDA has accepted Wockhardt's new drug application for its antibiotic Xenic, which is basically a new chemical entity or a drug which is under development by Wockhardt. Now, the new drug application was originally filed in September 2025. Xenic has been granted fast-track designation by the US FDA, which basically prioritizes the review for this particular drug. Now, the drug, remember, has been used both in India as well as the US on a compassionate basis on critically ill patients. The program, remember, was initiated all the way back in 2011 for Wockhardt, so it's been more than a decade in the making. Now, the company has indicated earlier that the drug will be manufactured by a third party in Europe. The peak revenues will be significant. For example, India, they're expecting market revenues of around 150 crores. And in terms of the market size globally, they've earlier indicated $9 billion in terms of possibly the antibiotic market. But analysts that we spoke to said that they expect a market size of around $1.5 billion for Xenic globally. And the other thing is that it could be around a $500 million product for Wockhardt in the US and globally, according to analysts. So it'll be interesting considering that it is a new drug application which has been accepted by the US FDA, after which they will have to undergo the review. And if they do pass muster, then yes, it would be a patented drug for Wockhardt if in case it does get approved.
Okay, all right. Thanks very much, Ekta, for that. And that's essentially what I want to put to Parag, who's waiting by. Parag, quickly, if you will, Wockhardt, do you have a view? Do you own it? Have you looked at it?
No, we have not looked at it, but we know about this drug since 2011. Wockhardt has been working hard towards it, and it is a great, proud and great achievement in my view that our Indian company has got this NCE for the first time. So, but yeah, we don't own the stock. We have Sun Pharma and granules in our portfolio, the pharma pack.
Yeah. Parag, you know, IEX was up. There was that hearing in front of the appellate tribunal on Friday, and some startling arguments were made. Went up 6% yesterday. Any thoughts here, IEX?
So I think the stock has underperformed massively. And so there were some desperate sellers also, because stock has not done anything. And because of this decoupling thing, there is a structural question mark around the market share of the company. But I think that is in the price now.
Okay. You know, Whirlpool is another one I wanted a quick view from. Again, it's plunged. Your thoughts?
No, I think, see, LG Electronics or Havells kind of companies are much more preferable in my view. Here is a company where company wants to repay its debt in US and they want to sell it in India. I would not like to buy this kind of a company in my portfolio. So, and we have LG Electronics as a very large exposure in our portfolio.
LG has a very large exposure. Number one consumer durable company in your portfolio?
Yeah, consumer durable number one company is LG Electronics.
Got it. Parag, we'll take a quick commercial break here. Thank you very much for those views. We'll come back with some technical trading ideas on the other side. Stay tuned. Welcome back. 3 minutes to go for the pre-open session, 17 minutes and 16 now something to go for the market open. Technical trades in focus now. Sudarshan Sukhani and Mitesh Thakkar are with us with exactly that. Gentlemen, good to have both of you here. Sudarshan, you go first. I mean, lots of yo-yo through the course of the day. There was one sell-off towards the end as well, last 40-45 minutes. Ultimately, we ended 20-25 points lower. So how to approach things here, at least on indices if there is a trade, and then we'll talk stocks.
Yeah, good morning. See, I've explained earlier that if you're looking for intraday trades in the Nifty, they won't come because the markets are in a very choppy environment. But on a day-to-day basis, the trend is up. We are at 26,175, very, very close to lifetime highs. The trade is to buy the Nifty and hold on to it and ignore intraday movements. Your stops are 26,100, but today Because we are also in weekly FNO expiry, the stops should be placed on a closing basis, not intraday. Just stay with the long trade and accept the intraday volatility.
Okay, all right, got that, Sudarshan. Mitesh, what about you? What's your view on the Nifty? We're getting rejected at around 26,300, 26,350. For starters, we could see a 30-40 point downtick. Buy the dip or wait buy?
Only thing is we're getting rejected at the 26,300, which is the all-time high. So I think the dip could be slightly bigger. And I don't know that, but I think a good entry point would be either you get closing about 26,300 or you get a decline which is substantial to give you a favorable risk-reward ratio and entry. So that will be close to about 26,000 to about 25,950 zone. So for the time being, I just wait it out, not worry about the index immediately.
Okay, got that. Your trades, stock-specific trades, Mitesh?
One Prashant, I have a buy and three sells. On the buying side, it's signed good pricing order action yesterday. So buy here with a stop at 1145 for targets of 1200. LIC is on the selling side. Keep a stop about 900. Look for targets of 850. BPCL is a conditional sell if it breaks 358. 352, 351. Sell with a stop at 358 for targets of 340. And DLF is a sell with a stop at 726 for targets of 690.
Okay, and Sudarshan, what about you? Stocks for the day?
Well, it's very different from Mitesh because I have an all buy list. I continue to have that. Hindustan Zinc is a buy with a stop under 490. CESC is a buying opportunity with a stop under 170. Paytm, which again comes in my list after a few days, is a buy with a stop under 1340. And finally, Indian Bank is a buy with a stop under 870. I also have trading positions in Indian Bank.
Okay, got that. Well, I think the first of the pre-open rates will start coming in any second now. Yeah, but they're a little all over the place. We'll have to wait for things to settle. Watch for Bajaj Housing Finance. That's where Vivek was alerting us. We're expecting a block. And it could be the parent entity that could be selling a little bit of stake to just basically comply with the minimum public shareholding norms. That stock is down about 6% as the pre-open session kicks off. Overall, we need to still get the settled rates for the Nifty. Mitesh, on the auto pack, now all the auto sales numbers are through, and Sud was telling us even Hero Motors had a very decent month gone by. Any trades here? Auto?
I've been liking Evelyn, it was consolidating at fresh highs, and last 4 times it's failed to close about 37.50, 60 zone is right there. So maybe in a day or two, once we get a closing about this 37.60 zone, I think another 150 points kind of a rally could happen on the upside. That apart, I think, Hero Motors is also, which is continuously shown an uptrend, which is very strong, and no signs of that getting weakened as yet. So while this may not be a good entry point because the stock has rallied from 5,300 to about 6,300, but I think the targets are close to about 6,550 to about 6,600.
Okay. All right, gentlemen, thanks very much. We will come back to you for some final trades once the pre-open session settles down at closer to 9:10. For the time being, we're putting the spotlight on the quick commerce space. A lot of platform companies, and we have so many of them that have come to the listed markets now. Elara has done an interesting note. They've done an interesting research comparing how Indian platform companies are moving towards, early to mid-cycle, and what the global precedent tells us. Large companies like US giants like Amazon, or even Chinese companies for that matter, they are, of course, early movers in the platform and quick commerce space. Karan Taurani is with us, who's worked behind that note. Karan, what are your findings?
Hi, Silvi. Good morning. So 2 things to note here. One is that, India is going to see an inflection point here in terms of e-commerce penetration. What happened in China was the e-commerce penetration moved up from 11% to 30% in about 8 to 10 years time frame. Similar was the fate of US as well, wherein the penetration doubled up in about 7 to 8 years. We believe India is also poised for this kind of an inflection over the next 7 to 8 years. We will see e-commerce penetration moving from 7% to 14%. The drivers for this are obviously the demographic factors, which is logistics, payment mechanisms, and increased per capita income. But the big delta is going to come from 2 things, specifically a market like India, which is going to be different as compared to global counterparts. One is the quick commerce penetration, which is going to amplify the growth rate in the e-commerce side. And second is categories. So many of the categories, if you look at the fashion category, if you look at the categories like, general merchandise or even food for that matter, the penetration numbers are extremely low as compared to global markets. So because of these two factors, you will see India market also going to double e-commerce penetration number over the next 7 to 8 years.
Karan, hi, morning. You also say that the global precedent shows that internet companies reach profitability only after about 15 years. You're giving examples of Amazon, Alibaba, DoorDash, etc. So what are the implications of that here in India for stocks under your coverage?
So if you look at any of the companies, we've kind of put these companies into various life cycles. The overall time frame is about 30 years. Most of the internet companies in India, which are B2C led, are at mid of this cycle, which is 18 to 20 years kind of time frame. And if you look at growth rates for most of these companies, it was in the range of 40 to 50% until about 5 to 7 years back, which is now converged more towards 20-25% for a mature e-commerce company, or rather for a food tech as a segment. But QC is a new business model, so that is just going to scale up now, and that will see continued growth rate over the next 4 to 5 years as well. But the point we're trying to make here is that after 18 to 20 years of operations, you see a big shift in terms of profitability. Okay, and I think we saw that in the case of food tech as well. I think most of the food tech companies are now operating at healthy EBITDA margins, and growth rates have kind of converged over there. QC, I think it's a long haul, but I think food tech is kind of on the maturity stage right now. But a lot of it will depend in terms of how the market dynamics also pan out. So if you look at the Chinese and the American markets therein, Amazon is a leader with more than 50% market share. In the China market, you have JD.com and Alibaba dominating the space there. India market is slightly fragmented. So now we're seeing e-commerce players coming into QCom. So another 3 to 5 years of consolidation may happen. Post that, you'll see a big focus in terms of profit in the QCom as well, just as we saw in the food tech segment.
Just a quick word, Karan. So that's a critical difference, isn't it? QCom, like what exists here, does not exist anywhere else in the world. I mean, maybe China, specific markets, etc. But some of the larger companies. So is that a critical difference? So can we extrapolate this at the stage at which profitability kicks in? What happened outside of India to India? Because QC is the big driver here.
Yes, absolutely. So I think the way e-commerce or food tech took 15 years to get to profitability, QC may not see that much amount of time, because e-commerce is already a category which is being created. You need to create the category. You don't have to actually get new customers for QC. It is just use existing e-com customers and give them this as a value-add service. So QC will actually take a lesser time to attain profitability. And we've seen that in the metro markets as well. A lot of commentaries indicating that mature stores are at about 3 to 4% EBITDA as a percentage of GOV. So there is steady traction here, and QC could see better profitability versus e-com and food tech from a time perspective.
So that's good to know, Karan. However, the dilemma for shareholders and investors here is you don't have pure play. I can't buy only quick commerce right now, or not buy food delivery, or only buy the out-of-home business. The listed companies are rolling all of this and more into one listed umbrella, right? So from an investor perspective, and we've seen the market reaction, and they're going on investing in some of these newer businesses, and every time they announce more capex and there's a burn and, the profitability comes under pressure, the stocks fall. So from a listed stock perspective, what should be done? And how much of it is already, this growth that you're talking about, how much is already currently discounted? And how should investors play the listed companies?
So exactly for that, we've derived two ways to value these internet companies, because there's always a dilemma whether one should value this on profitability, free cash flow, or one should value this on growth. So the ideal way is that for the first 15 years or say 18 years of operation, one should look at growth over here, because profitability will not come. That's quite obvious, because given the kind of market dynamics we are in, it's highly competitive. You see price war, you see new players coming in. After 18 to 20th year, once you see the category being penetrated, once you see acceptance of this by the consumers, the shift happens towards profitability. So we've done two valuation methods here. One is in terms of EV sales. We've actually benchmarked this to Amazon US. And usually when you benchmark EV sales multiple, you don't assign the time frame here. So we've actually benchmarked EV sales multiple to exact time frame in terms of where Amazon was, around 18 to 20th year of operation. Growth rates were about 20 to 23% for them at that time. Their EV sales multiple was around 2.5 times. And assuming today's returns growth rates in the next 3 to 4 years, CAGR basis about 45 times for the console business, 45% rather, you could see a 4.5 to 5 times EV sales multiples. That's the first valuation methodology that we have seen here. Second is we also run a DCF here for a long-term perspective that let's say how much can this category penetrate? What is the kind of profitability numbers this business can throw? From the food side, it's very clear that in terms of penetration, we are extremely low as compared to global counterparts.
Right.
Our food penetration is only 1.4% of population. Globally, it's about 5.5%. It was 0.7% until about 5 to 6 years back. So basis that, you will see a convergence in the food growth rates from about 18-20% today to 14% 5 years hence. And then by FY35, it will move to about 8 to 10%, which is like a legacy business similar to what QSR companies are going today largely.
Sure.
Then coming to the QC side, we've again taken the cash flow here. We've taken the penetration numbers here. For QC, we do expect profitability to come in the next 5 to 7 years, but QC will have a higher penetration number because of a larger use case, a larger AOV, and a larger TAM as compared to food tech.
You know, the last point that you said, so you say companies here already traded some 70% EV sales premium to global companies. So the question, if I flip it, is what can cause a derating?
So I think growth is a big variable here. So I think it's not only just profitability. Obviously, part of profitability is very important to drive valuations from here on. But growth is also an important metric. Let's say if the eternal growth rates converges from maybe 45% consolidated basis today to 30%, you could see a valuation derating basis that as well. So apart from profitability, growth is also important that you do have 25-30% growth rate, not from existing businesses, but you also drive into new markets, new businesses to drive better growth, to support your premium valuations.
And QC maturity, quick commerce part of the business, that'll take 5 to 7 years to mature, right? So that much volatility investors need to be prepared for. All right.
Absolutely.
Okay. All right, Karan, very helpful and very exhaustive report. Thanks so much for running us through some of the highlights over there. That's Elara on food tech, quick commerce, and more, all the platform companies. Let's get back to the screen and get to our trading experts. Sudarshan, what's your 9-10 call?
It's Hindustan Zinc, Hind Zinc, buy with a stop under 490.
Okay, Hindustan Zinc. And Mitesh, what about you?
A sell on LIC for downside targets in the range of about 850.
Okay, sell on LIC. Got that. By the way, the pre-open is also settled. So let's just quickly glance through what we have on the screen. About 0.3% lower. That's what the Nifty is indicating. Watch out for some of the financials. In the pre-open at least, ICICI Bank, HDFC Life, Bajaj Finance, HDFC Bank, SBI Life, Jio Financial, all of financials, slightly weak in the pre-open. We'll see how it plays out. We have Vivek now joining in. NSE has released final guidelines to align with SEBI's weight concentration requirement. What does it mean for the indices? Vivek, tell us.
Well, that's right. A while ago, SEBI had gone ahead and asked NSE as well as to look at both the Nifty as well as Bank Nifty. Right now, we are focusing on the Bank Nifty. They had asked NSE to reduce the concentration of individual constituent weights in indices of companies or stocks that actually had futures contracts trading. So under the revised method, the top 3 constituent weights, as far as the Bank Nifty is concerned, will be capped at 19%, 14% and 10% respectively. Now, this particular weight adjustment circular that has come up yesterday will be implemented in 4 tranches starting from December of 2025 itself. Now, what will actually happen is that the number of constituents in the Bank Nifty will go to 14 from the current 12. So the 2 stocks or the 2 banks that will enter the Bank Nifty are likely Yes Bank as well as Union Bank. Analyst estimates close to $110 and $80 million worth of inflows that will come into these particular names. And when, on the other hand, HDFC Bank and ICICI Bank will actually see weight reduction to go ahead and comply with this requirement. A little over $330 million worth of selling would be seen in both of these names, but likely spread over 4 tranches. So the headline is that, number of constituents on the Bank Nifty will increase, and there will be weight capping as far as individual constituents are concerned.
By the way, that block deal that Vivek was alerting us on, I think that's also happened on Bajaj Housing Finance. Stocks down about 7%.
Absolutely. And, we'll keep an eye out on some of this as markets open. I think we also want to just touch upon GMR Airports. Lots of upgrades coming through for this one. I think Bank of America has put out a note. Vivek, back to you. Okay, I think Vivek is stepped off. We'll get him back in just a bit. But GMR Airports at 107 plus or so at this point in time. I think Vivek is back. Vivek, take it away. GMR Airports, BofA, right?
Well, that's right. So BofA Securities has gone ahead and initiated coverage on GMR Airports. What they're saying is that, number one, you're actually looking at a company that in this particular year itself will go ahead and become bottom line profitable. quite a lot of important triggers that BofA has gone ahead and highlighted. Number one is the fact that the tariff revision that has come about is something that is quite positive. Along with that, they're also saying that the calculation of the HRAB, which is the regulated asset base of the company, which BofA is hopeful will come in favor of the company. The hearing is going on in the Supreme Court currently. They believe that is a key trigger. And on the back of that, they maintain a positive stance. They believe that it's a key beneficiary of both aero as well as non-aero growth spends that are coming about. They do see quite a few risks as well, especially, as far as the Supreme Court verdict on the HRAB calculation methodology is concerned. But overall, a positive note, which is why, they've gone ahead and initiated coverage today on GMR Airports.
Okay, all right. Well, we've got Vivek. Thanks very much for that. First rates starting to sort of come up in a couple of seconds from now. We'll look at GMR Airports, but of course, a lot of the other stocks that we highlighted for you as well. Bajaj Housing, we'll look at that one as markets open. Wockhardt was a big mover yesterday, and Ekta was telling us about that. So that will come up on your screen. Moil, Bharat Dynamics, Afcons, etc. are all on your screen, and a bunch more. A third lower is where the Nifty is opened. So pairing those losses, 0.18 down now, 26,130. The Nifty Bank is down 0.3%, 59,470, 480. But it's down, it's lower at the start, that is. The sensex is down about a quarter. Mid-cap index is barely up, unchanged actually. And I think the small-cap index will also give you a sense of where we are starting. So are we headed towards another quiet day? We'll see. The Nifty heat map gives you a quick sense of where things are landing at the word go. So banks are under pressure. HDFC, ICICI, Bajaj Finserv on one end. Asian Paints, SBI and Bharti are opening in the green. So it's almost evenly split between what's up and down on the Nifty. 60 points lower to begin this trading session. So let's talk about stocks.
Yeah, absolutely. And I think what Vivek just was talking about, maybe that's what's playing out on HDFC Bank and ICICI Bank straight away. This whole calculation, new regulatory requirements need the weightages of huge big boy stocks to be reduced if that index has a futures contract on it, which is the case of the Bank Nifty. So because of what Vivek just explained, there will be a weight reduction in the Bank Nifty on HDFC Bank and ICICI Bank in favor of stocks like Union Bank and Yes Bank. So I think that adjustment has started playing out. Both those stocks are down between 1 to 1.5%. Should also pull up HDFC Bank, biggest loser on the Nifty right now. What else? Tata Motors is slightly lower, 0.5% down. There is Adani Ports, which is lower. Bajaj Finserv, Jio Financial, also on the lower side. Eternal is slightly lower. That's the losers list. Now let's talk about the gainers. Asian Paints, top winner on the Nifty this morning, about 0.6% higher. There's some buying in Bharti Airtel, Max Healthcare and Maruti Suzuki, managing to put on a little bit of weight as well. IT is actually trying to fight back. So there's some green on Infosys, on Wipro I can spot early in the morning. But it's very, very mixed right now. Thanks to the big banks, the bias is definitely negative, and the Bank Nifty itself is down 0.4%. Nigel?
This particular announcement, though, it's expected. Yeah. And, that's where the street will align to it. So I don't think it's any kind of big negative or any kind of big rejig. And it'll happen over a period of time. That said, let's focus on a few stocks in the broader markets. MB Photovoltaic, well, that stock is up, close to around 5.5%. We just had the management with us. They're expecting to go with the current run rate, margins at around 33 to 35%. And the debt numbers come down to sub 100 crores, but they have a big capex plan going ahead. Stock is one of the big gainers, up close to around 5.5%. MB Photovoltaic, let's get that one up for you on the screen. Vodafone Idea, well, the street is taking the comments that came in from Mr. Scindia, taking note of it for sure. Stock is up close to around 3% as we speak. On the flip side, the large rate, a fresh supply with regard to Bajaj Housing, that's definitely plaguing the stock. Stock is down close to around 9%. JM Financial as well had a very, very good run, but that's coming for some profit taking. Stock is down close to around 20% from the recent peak. And some kind of mild profit taking on stocks that did well towards the final hour of trade yesterday. Physicswala as well as Lenskart, both of them have come in for some very, very mild profit taking in today's trading session. What else? One of the unusual winners is Forgings. Stock is up close to around 9%, more than 1 lakh shares that are traded. So that's higher than what we normally see. Volume's not very, very large. One of the big underperformers that's spiked up in trade. TrueAlt Bio as well, another newly listed company that saw a sharp correction from the peak. Well, that as well is seeing a bit of a bounce up. Though out there, the only around 60,000 shares have got traded, higher than normal, but still not very, very high volumes. On the losing end, Thyrocare is down close to 5%, close to 1.2 lakh shares getting traded out there. And Hariom Pipes that bursted up yesterday, today it's come in for some profit taking. It's down close to around 3% or thereabouts. So net, as we did that market check, the Nifty has recovered from the day's low. The mid-cap index has moved to the high point of the day. And the Nifty Bank is cutting its losses as well.
Okay, I think, it's looking better than where we started the morning. About 0.14% lower. The Nifty Bank is down about 0.3% as well. Lots of individual movers we want to address in just a bit from now. And we'll do that. Trideep Bhattacharya is now with us, so let's go across to him as well. CIO Equities, Edelweiss AMC. Trideep, good to have you with us here. Thanks for joining us. Is the slightly unhinged move on the currency a bit of a factor for equity markets? Is it a bit of a dampening factor for equities? I mean, additional dampening factor. How do you think about that, Trideep?
So one positive, one negative from market standpoint right now. I think I'll start with the positive first. I think after close to year and a half, the last result season saw earnings upgrades come through, which I think was a welcome and much needed data point for that to happen. A lot of effort from the government as well as from the macro conditions. And that's the reason the market over the last month or so has seen some buoyancy. But on the other side, there is a bit of lingering nervousness around the India-US deal when that comes through, the shape and form of it. And in some way, there is a dawning sort of thought process as to, if it gets further delayed, what might happen. And I think a combination of these two is keeping markets, I would say, in balance. But I would still say the major point that we actually closely track on the earnings side is finally looking up than down, which we have seen over the last 12 to 15 months.
Hi, Trideep. Good to have you with us today. We were just having a conversation with Elara. We were having a very detailed discussion on how these platform companies need to be valued, the consumption plays. Because that's the new era of consumption, right? We've moved beyond staples, really. How are you looking at them? And there are so many. There's food delivery, consumer tech, etc. And house help companies, all kinds of platform companies now in the listed universe. How do you find valuations and what's your view?
In general, expensive. And hence our approach is selective. So two important parts to the framework that we look to evaluate. One is, if not making money right now, how far they are from being profitable, and is there a path to profitability in the thinking of the management in the way they are going about it. Secondly, given that these platform companies are kind of online, the onset of competition could be fairly sudden and fairly kind of variable over multiple months. So because the moat sometimes can very easily be a certain kind of, one is distribution, but about the discounts and things like that. So while about 6 months ago, we find that the competition was going down because one of the unlisted players did not get funding or was not able to manage funding, that has actually come back, which means incrementally higher competition from where we are, from where we were about 6 months ago. So we watch path to profitability, the competition dynamics in there, and ultimately the unit economics over a period of time. Those three guiding principles. But directionally, we have been a little more careful of late, given that competition has been increasing. And what that means is path to profitability is probably a little more further out than what...
Trideep, can I just, I started with the rupee with you, and look at what's happening to the currency once again. It's going fast. Some of these things are quite amazing because just think about it. Just 28th of last month it was, right? I mean, we were at 80, we were at about 88.50, 88.60. That Friday, I think it was the 20th of November, we blew past those levels very, very fast. 88.80 was that stop. We blew past that, got to about 89.20. And in 5 days flat, from 89.20, which was seen to be at that point the new line in the sand, we've gone to now 89.83. I think we got to 89.85 now. And it's come up a little bit from that level. Just a couple of seconds back, I think 89.85 is the new all-time low on the rupee against the USD. So, yeah, I mean, I think the fundamental factors are all there, very clear. But I think what's exasperating the move perhaps at the margin is, of course, that the RBI is absent and not sort of providing a little bit of smoothening of this volatility that we're seeing, the smoothing intervention, if I can call it that, if I can use that word. Anindya Banerjee is with us of Kotak Securities with a quick live take on what he's seeing on his screen. Anindya, of course, has tracked and traded currencies for a long time. Anindya, good to have you with us here. Just a quick word on what you're seeing.
A very good morning, and thank you for having me. Actually, as the USD inches towards the 90 mark, which is psychologically very important, I think what is happening, the market is waiting for a heavy intervention from the RBI. Yesterday, we had seen a bit of intervention, but today, as of now, we have not yet seen major intervention. If now the USD basically moves above the 90 mark, what can happen is a lot of these option strikes could get triggered, be it in the offshore or on the onshore, and that can accentuate the move.
Yeah, and Anindya, morning. I mean, what's also really telling is that this move on the currency in the last 2-3 days, it's not happened like there's a major spike on the dollar globally. We've not even had like a huge basket of FPI outflows in the last 2-3 sessions, very normal. So despite, these factors, nothing major on the dollar, not a major, FPI selling spree in the last 2 days, we've come to these levels. So what's the sense? I mean, is the market reading or sensing that the RBI has made maybe its peace with the 90 level? Because the Reserve Bank has always said they're not here to defend any specific level. They're only here to ensure the market behaves in an orderly fashion.
Right. Actually, what has happened over the past couple of days is there has been a large NDF expiry. Either those positions are rolled over, means short positions, or they have to be covered. So because of that, we have seen an upward pressure. As you rightly said, the RBI is intervening, but not that aggressively. And what it generally creates is an environment where speculators enter the market to make some quick gains. And then they start to buy dollars, especially in the offshore, and that pushes the prices higher. Then it triggers the stop losses, the importers join, and it creates a kind of a trend. So that's why we are watching the 90 mark very importantly, because if that breaks, stop losses can get hit further, and it can accentuate towards the level of 91.
It was looking... Yeah, it was looking a little 89.85 we got to, which is a new low, and it's been pushed back by about 10 paise as we speak. I mean, I think that we should put the live rate up as well. 89.76, so 75. So quick. We don't know, and we'll. This 10 paise move, Anindya. I mean, hard to tell immediately, right? What's causing it, but
generally, what we have seen from the RBI intervention in the past, when they intervene aggressively, it doesn't fall 10 paisa. It falls heavily.
Yeah, heavily. Okay.
Sometimes the RBI also tests waters by selling little.
Little bit.
That 90 mark we have to watch.
Okay,
Anindya, when do you expect?
Just let's get him. Jayesh Mehta as well. He's Vice Chairman and CEO of DSP Finance. Jayesh bhai, good to have you with us here. Good morning. Your perspective on what we are seeing here now, and how would you read it, and way ahead?
So I think, while all the macros have been good, last couple of months has been solid import, both gold and from China. So that has been a great import. And more importantly, whatever the macros are, like if we have daily selling of FPI, right, that cannot be sustained unless the RBI comes and sells. And that's what RBI has been doing since last 2 years, right? But I think the pace in last few days or 10 days or so, they have been leaving some gap and let it go, right? So maybe we don't know whether it is deliberate, whether it is because as the trade thing with US, which is still lingering on, it's not moved yet. And also, it also helps a little bit depreciation with China and stuff like that. But more importantly, I think it is the FPI continuous selling without RBI support. Even I think there's some NDF which matured. I think that also they didn't roll over. So it doesn't look like anything happening for the heck of happening, but I think it may be letting it go. Because if they want to intervene, they can really intervene in multiple ways. So they are not really bothered doing that at this juncture.
Hi, good morning, gentlemen. Mr. Mehta, I wanted to ask you, what's your view then with regard to the RBI action? You know, the real GDP growth was a little bit better than expected. Nominal is still lagging. And you have this rupee weakness as well. What's the action you're expecting from the RBI in the upcoming meet? We were factoring in a rate cut. Do you think that gets pushed back a little bit, or do you think they go the course and they cut rates?
No, there are a lot of economists, a lot of traders have been saying that it needs to be pushed back and stuff like that. But I think they need to do it because, you know, the inflation being so low, at the end of the day, the mandate for them is to manage inflation, right? You know, when it is above the 6% mark, people do bother about it. And when it is below 2% mark, they need to be bothered about it. So they will have to do this rate cut and most probably very high chances of it unless they may have something else in mind. But more than rate cut, what will really help the market and the bond yields particularly is the OMO purchase. They need to do at least 2 lakh crore till March. And that money infusion is definitely required because of intervention done in the FX.
Sure. Anindya, just to come back to the current technical factors at play, I was looking at the numbers as well. I mean, FPI selling in November actually was very sanguine, just about $400 million of selling. Yesterday, we had about $300 million of selling coming through. Your point on the NDF rollover, at what point do you think the shorts will want to maybe cover or at least book profit? I mean, are there any levels in mind? At what point the shorts decide to have a bit of a rethink?
We have seen when it changes the handle. So let's say from 7 to 8 or 8 to 9, those macroeconomic wise, it has no bearing, but it tends to have a big impact for traders who have positions because there the stop losses are above 90. Somebody may have at 90, 10, 90, 20. And a lot of traders watch for a close. If you get a close above 90, you get a confirmation, and then the speculators join in, and then it becomes a self-fulfilling prophecy.
Yeah, no, that's on the weak side. Anindya, I was talking about the reverse. I mean, like, if the RBI steps in a heavy way, then obviously the rupee shorts need to start covering. So when does the reverse start? At 90, all the speculators are in the market, and then it just becomes a self-fulfilling prophecy. What about the other end of the trade?
Exactly. So if you see a month back, RBI had intervened very aggressively once, and we had seen a sharp drop, almost like 1 to 1 rupee 20 paisa on just 2 trading sessions. But the point is, yes, below 89, 88, 80, we could see a lot of the stops getting hit. But that could be just a flash in the pan because if the selling stops from the RBI, the stops are hit, then from the next day onwards, again, you will see an uptrend. It will not change things structurally, but it will give you a temporary relief. So below 88, 80, a lot of the stops are there of the people who are long on the dollar and short on the rupee.
It was exactly the opposite, right? People were thinking, this is on the 28th when people were comfortably short dollar thinking, this trade deal perhaps is around the corner and you'll easily make some money. But that did not happen. That did not come to pass. And I think that soured a little bit of sentiment on that day when, of course, there was no intervention. There was no supply from the RBI as well. But Jayeshbhai, just to wrap up this conversation, we've got a current account deficit, right? Most, I think, other Asian emerging markets are running a bit of a surplus. Not as a comparison, but just it's all relative. Capital flows, look at FDI, look at FPIs, which Anindya also referred to. That has also slowed down quite a bit. So, I mean, the currency is adjusting to the new fundamentals, right? It'll happen in an orderly way or a disruptive way, I guess that is the question. So, beyond a point to fight the currency's adjustment to these realities, perhaps is futile, and that's the view that the RBI is taking, Jayeshbhai?
I think so. So it's like, there was this trade thing getting through, and there was a lot of rupee long dollar short position in the market. And, at some point of time, you cannot continuously keep on spending our reserves, right? And the selling was non-stop. And, of course, we did have last 2 months, we had good imports, both gold and from China. So I think that also did impact a little bit more. And I think if post the trade thing, if the sentiments does not change, if FPI continues selling, I think people will. I think some of them have already stopped their rupee long. People will actually go to other way around, which is dollar long positioning can happen if the things continue to be selling off in equities.
Yeah, absolutely. We'll continue and pick up on some of this a little later in the day. Thank you very much, Jayesh Bhai, for joining us. Anand, it was always great to have you with us on the program. So another new low, 89.85 is the new low for the rupee against the dollar. And of course now, it's been pushed back a little bit by about 10 paisa or so. Let's come back to equities. And I think, big cement in focus. Nigel.
Well, that's right. Shree Cement. That's the next management on the show. Reports suggest that cement industry has been facing some headwinds, both on pricing as well as demand. To understand the trends, what's the way ahead? We're joined by one and only Mr. H.M. Bangur, the chairman of Shree Cement. Hi, Mr. Bangur. Always a pleasure, sir, to have you on the show. Well, just highlighting the three broad points that we're going to be looking at in this interview. The cement industry trends. What's the outlook for Mr. Bangur for FY26 and FY27? And what about his capacity addition plans? Well, Mr. Bangur, let's get to the first point. Throw some light on the current demand scenario, given that Bihar elections are over, along with the exit of the monsoon. The first half of the year on volumes has been flat for you. Where do you end this year? 36, 37 million tons that you had spoken about earlier. Do you think you get to that mark?
Yes, we still maintain 36 million ton plus, and we maintain that mark. Earlier, we were always talking about price versus volume. Now we have to talk, and we have crossed that barrier. In last 10 days, after Bihar elections, all the festivities of Chhath Puja and everything over, from last 5 days, we are seeing a good jump in demand. We are also getting it. And now we will be talking of both price and volume, not one at the cost of other. Whatever pain had to be taken in volumes had been taken, and we still maintain the yearly projection as 36 million ton plus. That is the first question. The second was about the capacity addition. We had indicated that by 29, 80 million ton will be our capacity. We still maintain the same. And by this year end, it will be around 68, 69 million tons.
All right. 80 million tons, sir, by when?
29.
By 29. I think some on the street were expecting it to be 2028, but 28, 29, I think that's the guidance you're giving us.
That was pushing us too hard. We never said 28. We always maintained 29. The street may be thinking anything.
You know, Mr. Bangur, over the years, you've been such a good performer. Some expect Mr. Bangur to always outperform. Maybe that's where the pressure comes from.
That's why.
What about, so all of this will be organic, or will there be some inorganic? I've heard of late that, the team of Shree Cement has been visiting some plants. You could correct me on that. Some of those plants are in the market. I don't know whether you're looking. Are you looking at Deccan Cement?
No, we are not looking at anything. All the growth will be organic only.
All right. So you're just, looking at some of these units in terms of to get some data points, etc. But you're not an aggressive buyer inorganically. Is that correct?
We are not buyer. We are not trying to get to data point. Sometime, if there is a very good mines or something good, we are looking at it. Not to gather data point, but in case something unexpected is there in the unit, 1 or 2 units we have gone, but not really seriously. We are not chasing anyone.
Okay, thanks for clarifying on that. As the street but is a little cautious. They're saying that Mr. Bangur is losing his dominance in northern region. Motilal Oswal, for example, they have put out a note. They're saying that in the northern region, your share has declined, to ballpark around 22% from around 24%, say around 5-6 years ago. And they're saying in the next 3 years, because the competition is getting aggressive, your, market share will come down to around 19%. What do you have to say about that? You're okay?
Yes, as we will be not adding much capacity in the north, we have become an all India player. 19% or so, between 19% plus minus 0.5%, that should be our capacity in the north, maybe in 3 to 4 years' time. As the cement demand is increasing at such a pace, you can't keep pace up with the capacity. So we are agreeable to 19 to 20%.
Okay, all right. So you're not too worried on that front. Let's tie this in, sir, then, because you're saying now you will focus both on value as well as on volumes. And 36 million tons is what you're looking at. But there was a recent...
Let me say that is only the North volume. When we see the all India volume, our market share in India is increasing. As we have increased our volumes in South, East, West, so our North India volume only if one side is to be seen, it will come down a little, but our all India volumes will increase. This has also to be highlighted equally well.
All right. So the market share, I think all India market share is around 9%?
Yes, it will remain so.
All right. You want to be it's not only about the North. On an India perspective, pan-India, you'll be hold at around 9%. Got it.
Right.
Given that the volume push is there, you're seeing demand is improving a little bit and pricing as well hopefully improves. And we have some recent announcement, freight cost, I think there was some reduction that was announced by the Indian Railways. What does this mean in terms of an EBITDA per ton for the second half of the year? On an average ballpark, what should it look like?
Our ballpark, the EBITDA per ton should be maintaining what was there in the first half. It will be almost same with increased volume in the second half. So the overall profits will increase sharply.
So it will be approximately 1,250 to 1,300 rupees. Should that be fair?
1,100 to 1,200 should be what I will be comfortable with.
Okay, all right. And what about pricing, sir? The GST rationalization came about. All the benefit was passed through. How has pricing changed?
All the benefits have been passed through, and the industry had been little overcautious. They have passed through little more than what the GST has given. So now it will be increasing to cover up whatever been additional losses are there because of the GST reduction. There was some turmoil and nobody could hold to the right level. Levels have gone up a little more than what they should have gone.
All right, Mr. Bangur, when CNBC-TV18 was celebrating its first anniversary or first birthday, Vicat at that point of time had offered to buy Shree Cement, I think, for around 1,350 crores. You went ahead and you said no. Now, 25 years later, the company is sitting at a market capitalization of more than 95,000 crores. You're sitting with some cash in your books as well. What is your vision for Shree Cement from here on? You took a splendid move 25 years ago. From here on, where is it headed? What's the next leg of growth coming from?
We are increasing a little in the dividend. We will be maintaining our cash pile only at the same level. We will not increase our cash pile. So if no ideas come, the shareholders will get the cash money. Otherwise, they will get the assets. And 80 million ton in 3 years also will require a lot of cash. So our cash flow is practically tied with 80 million ton. And there will not be any surprises and no inorganic growth is there. So our balance sheet for next 3 years, cash flow, everything can be projected.
Right, sir. Cash flows projected. You're close to 1 lakh crore in terms of market capitalization. And what a splendid move it was, in early 2000 when you said no to selling out at 1,300 crores of market capitalization. But some investors are saying, in the last few years, the returns haven't been as great. What do you have to say about that? Can you give them a little bit of a sweetener? Because you want to do things organically. Cash flows are steady. The entire trajectory has been laid out. Maybe give them a one-time dividend. You're sitting on $1 billion of cash. Or maybe a buyback. What do you say about that?
No, buyback at these values for company will not be good. Company requires continuously cash for further growth. So buyback will be, we are the biggest shareholders. So the outside shareholders will not get much if I buy back. So dividend and further growth is the thing. As far as our future growth plan, it will be in the cement, power, cement-related business to reduce the cost of cement, cost of production. A lot of things will be there.
All right.
Secondly, when you are saying that the returns have not been good in the last 3-4 years, I totally agree. But that is the fate of all cement industry. In the last 4 years, total EBITDA growth of cement industry is close to zero. Industry as a whole, C or A or B hardly matters. The industry is not growing. Over emphasis on price control is there. The cement industry profit growth is not there, though investments are coming.
What do you think, sir? The time has come now. We have been kicking the can down the road for the last 3 to 4 years. Is it time for the cement industry to finally bounce back? Demand will likely to show up. Costs at least have been rationalized, and a lot of producers like you have focused on the cost side. So better times ahead?
I feel so, sir, because only the expectation is that in 2 to 3 years' time, 3 to 4 years' time, one good moment comes and then the same profits are maintained. Now the profits are in the range for the industry at 900, 800 to 1,000 rupees for quite some time. It has to change. Otherwise, no new investment can become viable.
All right. And the return ratios as well come down to very, very low levels that it may not make sense then to add capacity. Well, Mr. Bangor, a pleasure speaking to you as always. It's been a while since we chatted. Looking forward to meeting you in person as well, sir, in the coming weeks.
Thank you.
Well, on that note, though, we'll slip into a short break. On the other side, we'll get you a conversation with the management of Wockhardt as the US FDA has accepted the NDA for Zenec.
Welcome back. So as far as the market is concerned, things haven't really moved much. We are practically where we were at the start. Slight drift down. That's what the equity market is doing, 80 to 90 points lower. Let's focus on that big block trade that happened. Bajaj Housing Finance stock's been down 6-7% ever since. Back to Vivek on this. Vivek, you were telling us this, in all likelihood, this is the promoter selling some stake to meet regulatory requirements, right?
Well, that's right. And, that is going to be the concern going forward as well. I just checked the data as far as, at the end of Q2, how much did Bajaj Finance actually hold? A little over 88%. So even after today's stake sale, which we understand that they paid around 2% equity, they're still left with quite a lot of selling to do in order to go ahead and meet the minimum public shareholding norms. It'll be interesting to see whether they continue to go via the block deal route or whether they go via some other route in order to go ahead and ensure that their shareholding meets the MPS norms by the end of the required period. The SEBI rules have now been tweaked, so that gives them some amount of relaxation in order for the timelines to be met. In talking about today's deal itself, little over $170 million worth of equity changed hands, almost 9.6% discount to yesterday's close, which is why you're seeing the kind of downtick on the stock today. And like we mentioned, it is the promoter, Bajaj Finance, that actually exited the stake.
Okay, all right, got that. So we'll keep this stock on the radar, 8% lower and still at those levels. Thanks for that, Vivek. Let's see what else is shifting in the market. The mid-cap market actually is doing better. Mid-cap index is flashing some green, even as the large-cap indices are struggling. In terms of stocks, interesting movers on the upside, Wockhardt, and we'll talk about Wockhardt right now because there's a new drug application that they filed in the US for their drug Zenec. That's pretty big. The last time we spoke with Mr. Khurakiwala, he was telling us that this drug could be as big as $500 million for Wockhardt. And now that they've moved on to the next steps in terms of regulatory approvals in the US, the market is taking heart from it. We'll get to that in just a bit. So that's one big mover. Some of the tier 2 banks are looking better. Union Bank is up to 2.5%. Now, this is also because of the index adjustments that are going to be underway. Remember, Bank Nifty will see a weight reduction in the big boys, ICICI Bank and HDFC Bank. And these stocks will be included in the Bank Nifty, Union and Yes, and both of them are holding up. But for the time being, let's go back to that big story on Wockhardt. The stock is still up 6-7%. The company has announced that the US FDA has formally accepted the new drug application for its antibiotic Zenec. The drug has been used in both India and the US on a compassionate basis on critically ill patients. Our colleague Ekta caught up with Mr. Khurakiwala, founder and chairman of Wockhardt, and began by asking him about the drug approval and the company's plans ahead.
This is for the first time for us and for India. A new drug application has been accepted by US FDA. And they normally would clear this drug in 6 to 8 months. So sometime middle of next year, we accept its approval in USA. And I think we need another 4 or 5 months after that to really introduce and launch the product in US.
Okay. What I mean to ask is that what are the number of steps that we expect till mid of next year? For example, are there fresh clinical trials that the company would have to undertake for the US in terms of fresh data?
No, I think the file is complete. Okay. The very fact that they've accepted the file means it is complete in all respect. So it is only evaluation by US FDA of our clinical trial and other scientific information. And they are visiting us to check up on the scientific information and visiting some of the sites where we have manufactured this product in Europe, which is already a US FDA sites.
Okay. So you're likely to hear back from the US FDA possibly by mid of next year and probably get the approval by then as well.
Yeah, we will expect to have an approval by mid next year, but we are in continuous dialogue even now. And you would be surprised to know, and we were surprised, during the lockdown, they were in discussion with us because this is a very priority drug for FDA, and that's why it is a fast track giving. Only in anti-infective, this fast track option is available.
Okay. All right. So when you say it's on fast track, that means that when it's a priority review, what are the steps that the US FDA is taking in order to expedite it?
I think they are committed to timeline in terms of after acceptance of the file and approval. Okay. And generally it is 6 months. So in normal drug, it takes about a year or so for US FDA to approve a drug. So that is what it means by the fast track. Okay, they will internally put it in a fast track so that they complete the review in a shorter period of time.
Okay. Does the fact that the drug has already been used on compassionate basis, and I think the last figure that you gave us was at over 50 patients in India and the US, does that increase the chances of an approval because it's already been used in the US on a compassionate basis?
Yeah, as of today, it's more than 70 patients on compassionate basis who have been cured and saved their lives. I think it is important for them and it is an important information for them. But the fundamental basis of approval is what we have done officially in terms of clinical work and preclinical work.
Okay. If in case you do receive approval, say by the middle of next year or the end of next year, you would then have a patented drug that you're selling in the US. That's how we would read it.
That is absolutely true, and our patent is there for up to 37, actually, in the US.
Okay.
For at least 10 years.
Okay. So as of now, you've not received approval in any country for Xenic. You've applied in India and the US.
Yeah, that was our strategy. Okay, we wanted to apply to US first, because once you get a US FDA approval, the approval in the rest of the world comes very fast.
Okay. What is the status in India?
We have applied 6 months back, more than 6 months back actually. Sometime in March we had applied. But I do not know how our internal system works, but they've not even opened our file yet. So we are following it up with the authorities to expedite because it is a life-saving drug. And the earlier we have in the product in the market, it would be better. In India's case, we have this more than nearly 70 patients on compassionate use in India. We have also done another meropenem-resistant trial where we had nearly 95% plus success rate. So all this, and we have saved so many lives, and there is so much pressure from medical fraternity for our drug and saving lives. And unfortunately, we have no further quantity available for even for patient compassionate use. And we are working on it to hopefully make it available sometime in a month or two.
Okay, so you've had a conversation with the Indian authorities with regards to a possible, possibly increase the rate of approval in India?
Yeah, we certainly discussed with them, but we still not heard from them, and we hope they will. And we expect India approval to, hopefully we were planning to get it much before FDA approval, but let us see when now it comes.
But I just wanted to understand, when you say that you've used the drug on a compassionate basis in over 70 patients now, that's what you mentioned. How many were in India? How many were in the US?
There were 3 US patients. The rest were from India.
Okay. And what's been the outcome of those patients?
Every patient where it was not given in the last stage, recovered. So it was more than 95% usage. In some cases, it was used for 1 month, 2 months, up to 6 months also in some cases. So this drug has proved a remarkable efficacy and safety. Because one of the important things in antibiotic is normally not given for a week or two. It was given longer time because the patient came at a very last stage.
Okay. Just wanted to understand, what is the market size that you're working with? Because analysts are working with around a $1.5 billion estimate in terms of the global market size for Xenic.
Actual market potential is about much more than that, but we expect that our drug should do about $1 billion or $2 billion of usage worldwide.
You're saying global sales should, the peak sales should be between $1 to $2 billion?
That is right.
Okay. When you talk about global sales, which countries are you including and how much are you expecting from the US in particular?
US generally contributes 40% of the global market.
Okay.
So the Western market will contribute about 75% plus of the global revenue, and the balance will come from the other countries.
Okay. And India, you had mentioned your peak sales earlier in earlier interviews at around 150 crores. Are you changing that figure?
Oh, we are, yeah, I think that will happen much faster because of the kind of response and incidents we see here. And we should be doing much more than that 150 figure.
Okay. Out licensing, you've spoken about it multiple times. Now you have, one more feather in your cap to probably extend to those companies. Are you in talk?
It depends on the valuation we get in out licensing, and if we get right valuation, we will go ahead with that option. Alternatively, we are ready to market our own product because we have a series of products. So if we establish an organization now, I think we have products coming up in next few years, so that same organization would work, and it will be long-term beneficial for us also if we do it ourselves.
Okay, all right. Well, that's a walkout conversation. Stocks up about 5.75%. Markets, by the way, sold off quite heavily. And I think 100 points lower at the day's low. It's picked up a little bit, 26,086 at this stage. We're down about 88 points on the index. So there is that pressure. The Nifty Bank is doing much better. It did not, first of all, sell off like the Nifty did, as much as the Nifty did. And it's already started trying to come back up, down about 0.25%. So it's actually higher than where it was at 9:15, as opposed to the Nifty, which of course is lower. So that's the overall picture. Maybe just a quick look at the advanced decline, which is clearly on the negative side, almost 2:1, 2 down for every 1 up. So it's not a great-looking screen. Mid-cap index is flat on the bottom of the screen. And I think the small-cap index will... is also down about 0.25% or so. Yeah, I mean, the small cap index is down more. Mid caps are flat. We'll talk about more stocks from the broader space in just a bit from now. But the interview with Telecom Minister Jyotiraditya Scindia that my colleague Parishad conducted, Minister Scindia said that the government is awaiting a formal request from Vodafone Idea seeking AGR relief. And asked about Bharti Airtel, he clarified that any other company seeking AGR relief must approach the Supreme Court. Listen into some of those comments.
Ask you about the big development that has come from the Supreme Court, with the court saying that the government can go ahead and reassess all of the AGR dues of Vodafone Idea. Having said that, what next is the government planning to do? What are the options?
So, post that judgment, which is what is being examined within the department today, we are also waiting the formal request from Vodafone. Once that does come through and we complete our evaluation internally, we will then put forward our recommendation of what can be done and what cannot be done.
Bharti Airtel has also requested the government for reassessment of all AGR dues. Are you considering the same?
Well, no official request has come to me as of now. In the event that they would pursue that, again, that is something that the court of the land will have to decide.
When it comes to waiving off or reducing the AGR dues for Vodafone Idea? Would this be specific to one company, or whatever kind of resolution that you come forward with, relief package that you come up with, it will be for everyone?
The Supreme Court judgment is qua Vodafone India. So whatever we come up with has to be qua Vodafone India. We cannot cross the border of the Supreme Court judgment.
So you feel that the question of parity for the whole industry doesn't arise here?
As I mentioned, the Supreme Court has made a verdict on Vodafone India, and that's what is on our table today.
So very simply put, any company which wants similar relief, they will have to approach the Supreme Court.
Absolutely.
Okay, so that is the big interview, and we'll keep playing snippets through the course of the day, and the focus remains on Vodafone Idea. For the time being, let's bring Chandan Taparia into the conversation, figure out some trades at 10 a.m. Chandan, good morning. What's the view? Nifty, Bank Nifty, and any individual stock trades?
Good morning. Thanks for having me. So we have seen a corrective move in the market. However, on the last trading session, index made a all-time high at 26,325. But some profit booking is visible because of the weakness in the INR. So I think some sort of consolidation could be there in the market as selective heavyweights counter are witnessing profit booking decline. So I believe that Nifty may find support near 25,800 before it starts the next leg of rally. While on the upside, 26,250 and 26,325 could be the key hurdle. So looking for some range-bound bias and support at 25,800. Talking about Bank Nifty, 59,000 is major support, 60,000 is the hurdle. We need to play with the same. And positive view on the PSU Bank and upcoming RBI policy will be a key trigger. Stock specific, positive view on the Bank of Baroda. The stock has been making higher tops, higher bottom on the daily chart, given a consolidation breakout on the weekly scale. So one can buy with support of 295, looking for an upside target towards 315. And one more trading idea on the buy side is Motherson Samvardhan. Strong breakout, pollen flag, high tops, high bottom. Rising trend line is supporting well with positive rollover data. So one can buy with support of 140 for an upside target towards 125.
Okay, all right. Thanks very much for that. Markets down 100 points once again. So that 20-25 point recovery has been given back, and 26,070 is where we're at. I think 25,800 or so is the 20-day, so it's still some distance away on the index. We'll take a break. Manisha on the other side. Commodities in focus when we return.
Welcome back. As promised, let's focus on the commodity market action of the day. Manisha was telling us some profit taking is coming through in the precious metal space. Let's see what she's tracking now. Manisha.
Well, yes, the precious metals have seen a bit of a decline, but not base metal prices. And this year, clearly, when you look at the metals, the ferrous metals have continued to see a decline. Steel, for example, is trading near 5-year lows, but it really is about the non-ferrous metals, which have continued to do quite well. So take a look at the copper prices, and 11,200 plus kind of levels is what we've seen on LME, which is a record. And when you look at the US copper prices, that one is trading at a 4-month highs as well. Well, there is support because of one, tight supplies, you have elevated premiums, and then the US dollar index also has weakened to around 2.5-week lows. That has been supportive. There is also uncertainty over potential future tariffs coming in from US. There also is 88% probability right now that the US Fed will cut interest rates in the meeting in December on 10th and 11th. That clearly has been one of the major supporting factors for many of those asset classes. It really is about Chinese smelters because they are planning cuts to combat overcapacity issues. Now, this is one factor that has led to a lot of support come in for copper prices in the last couple of months. By the way, since the month of August, we've seen prices gain up by 13% as the rhetoric continues from China there. Well, the major copper smelters are expected to reduce production by 10% in 2026 is what has been supportive. China has halted approximately 2 million tons of planned smelting capacity for next year is what the markets are reading into right now. When you look at the Chinese smelters, well, they account for nearly 50% of global smelter output. So the decision coming in from China is what is important and has been supporting prices. Apart from that, it also has to do with the International Copper Study Group. It says that currently the 2024 global capacity was at 26 million tons, which is expected to go to 30 million tons in sense of smelting by 2028. That's an estimated number there. And if these numbers do continue to be on the stronger side, even then the demand is much higher, and that would be supportive. it's not just about China. When you look at the rest of the world, there are mining concerns there as well. The incident at Indonesia's Grasberg mine, it is expected to resume completely only by 2027 first half. So that is a supportive factor. It also is about recurring protests in Chile and Peru. There are output concerns also coming in from Dominican Republic and Democratic Republic of Congo, major producers again. And then lower output guidance from Anglo-American for 2026. The support also comes in after BHP is estimated that the demand for copper by 2050 would be up by 70%, and there wouldn't be that kind of copper availability into the markets. So going forward then, for 2026, the expectation in sense of copper are slightly on the higher side. We already have seen 11,200, and you have Bank of America talking about 11,300 of an average price in next year. Cities talked about an all-time high of 12,000. Goldman Sachs talks about an average of between 10,000 to 11,000 there. And JP Morgan talks about various scenarios where they expect the prices to trade within 9,500 to 12,000 therein. And then Deutsche Bank also has come out with a report this week itself where they are talking about $11,000 a ton. So interestingly, while not too high highs is what we are looking at, but the prices are expected to trade around these levels for next year as well.
Okay, all right, Manisha, thanks very much for that. Some forecasts coming in there for copper. We'll take a quick commercial break here. It's the economy. Lata in conversation with Suyash Chaudhary of Bandhan AMC and Dheeraj Lim of ANZ Bank on the outlook for bonds and the rupee ahead of the RBI policy. Stay tuned.